I'm going to walk you through 5 alimony agreements that backfire badly, and how to avoid becoming another courtroom horror story. Think your alimony agreement is protecting you? Think again. Because behind every peaceful settlement, there's someone who ends up paying for peace, literally. You see, some of the most fair alimony deals, the ones that sound reasonable, balanced, even compassionate, end up destroying people financially. Not because of greed. Not because of revenge. But because you didn't know what was hiding in the fine print. The clauses that sound harmless at first. Temporary support, reasonable payments, maintain lifestyle. They look innocent on paper, until you realize they were written to protect the system, not you. I've seen people lose homes, retirement accounts, even their mental health, not from the divorce itself, but from the deal they thought was fair. And here's the real kicker, it's not always your ex that traps you. Sometimes, it's your own lawyer, rushing to finalize things before you truly understand what you're signing. I know this is tough. You're exhausted, emotionally drained, and just want it over with. But if you sign blindly, if you trust the words standard agreement, you could be signing away years of your future. Because once you see what's really going on behind these documents, you'll never look at the word fair the same way again. If you're going through divorce or thinking about it, subscribe now, because over the next few weeks, I'm exposing every hidden clause lawyers don't want you to see. Agreement 1. The forever alimony trap. This is the one most people don't even realize they're walking straight into, until it's too late. On paper, it sounds noble. One spouse supports the other until death or remarriage. It feels compassionate, mature, like you're doing the right thing after a painful ending. But here's the truth nobody tells you. Forever alimony isn't fairness, it's a financial sentence. Once you agree to it, it's locked in. It doesn't matter if your income drops. It doesn't matter if you lose your job, or if your ex starts making 3 times what you do. The court doesn't care about emotional exhaustion, or the cost of rebuilding your life. All that matters is what you signed. And in some states, Florida used to be one before its 2023 reform, this meant you could be forced to pay for life. Think about that. You could get remarried, have new children, face new bills, and still be paying a monthly check to your ex decades after the marriage ended. Imagine retiring after 30 years of work, only to find out your retirement income isn't really yours. Because a portion of it is already spoken for, by your past. And here's where it gets darker. Divorce lawyers know this. They know permanent alimony is outdated. They know it rarely adjusts in your favor. But they still push it, because it simplifies the case and guarantees a clean settlement on paper. To them, your peace of mind is paperwork. To you, it's your financial future. The system calls it support. But what it really does is trap you in the same marriage you just escaped from, this time with no love, no partnership, just obligation. People assume the system will adjust if things change. But here's the brutal reality, it doesn't. You'd have to go back to court, prove a substantial change in circumstance, and even then, judges hesitate to modify permanent alimony unless the change is dramatic. Lost your job? They might say it's temporary. Your ex got remarried but still collects. They might argue it's not significant. You'd be shocked at how many people stay financially chained for years, all because they didn't demand a review clause before signing. A review clause is your safety valve. It says, if my financial situation changes, or yours does, this agreement can be revisited. Without it, you're stuck. No court sympathy. No easy exit. No fair adjustment. Just a standing order that drains your account every month. And that's what makes the forever alimony trap so dangerous, not the payment itself, but the illusion that it's permanent fairness. It's not. It's the system's way of saying, you'll keep paying for stability, even if it costs you your freedom. If you're in the middle of a divorce right now, stop and ask yourself. Does my agreement end, or does it linger? Because here's the thing, once that pen hits paper, temporary becomes forever faster than you think. Never, and I mean never, agree to permanent alimony without a clear review or termination clause. You deserve to rebuild, not repay your past forever. But if you think forever alimony is bad, wait until you hear what happens when your own generosity gets turned against you. Agreement 2. The voluntary overpayment trap. The voluntary overpayment trap. This one doesn't start in a courtroom, it starts in your heart. It's late at night, your lawyer's papers are on the table, and you're exhausted. You've argued, cried, negotiated, begged, and you just want peace. So when your ex says, if you could just add a little more, make it easier for me to move on, you think, fine. You tell yourself, I'll pay more than required. I'll take the hit. I just want this over. And in that moment, it feels noble. Mature. Like you're doing the right thing. But what you don't realize is that the law doesn't care about your emotions. Once that higher number hits paper, it becomes your new reality. Because courts don't ask, was this fair? They ask, did you agree to it? That's it. So even if you lose your job, even if your ex gets promoted, even if inflation eats away your savings, that overpayment sticks. You could walk into court years later, show them your financial hardship, and they'll still say. But this is what you agreed to. Lawyers have a name for this. They call it the precedent trap. The moment you set a number above the legal formula, that becomes your precedent, your benchmark. And it's not just about numbers. It's about psychology. Once you've proven you can pay more, the system assumes you should. They don't see it as generosity. They see it as capacity. And suddenly, your moment of compassion gets twisted into an obligation. I've seen people who agreed to pay just a little extra during separation, a few hundred more, maybe cover an extra bill, and years later, that temporary kindness became a permanent order. The court called it established support. The ex's lawyer called it pattern of payment. And the payer? He called it a nightmare that never ended. This is how the system turns your good heart into a legal weakness. You were never supposed to pay with guilt. But divorce has a way of making good people feel like they owe more, not for what they did wrong, but for what they couldn't fix. That's the trap. You think you're buying peace. You're really buying a lifetime subscription to regret. And what's worse, once that number is written down, even your attorney's hands are tied. They can't argue against an agreement you voluntarily signed. They can't say it's unfair, because fairness, in the eyes of the law, ended the moment you said yes. That's why it's critical, absolutely critical, to never agree to more than fair. Not out of coldness, but out of clarity. Stick to the court guidelines, the state formula, or the numbers based on actual financial proof, not guilt, not pressure, not peace. Because peace built on guilt doesn't last. You'll walk out thinking you closed the chapter, but really, you just rewrote your future in red ink. Remember, divorce isn't about proving you're the better person. It's about protecting your stability so you can heal. Don't let temporary emotion write permanent numbers. Because generosity may feel good for a week. But a bad alimony deal can follow you for decades. If this already sounds unfair, you need to hear what's next, and that's exactly why I post weekly videos breaking down divorce traps like this. Hit subscribe, and don't let anyone use your signature against you again. Because the next mistake. It locks you into payments long after you thought you were finally free. Agreement 3. The no end date clause. This one doesn't shout danger, it whispers it. And that's what makes it deadly. On the surface, it seems simple, alimony payments that continue until further notice or for a reasonable time. Sounds flexible, right? Fair. Open-ended. But here's the problem, reasonable doesn't mean what you think it means. In the courtroom, reasonable is a blank check written by time, and cashed by your ex. Because unless your agreement spells out exactly when the payments end, 5 years, 10 years, or after a remarriage, those checks can keep going indefinitely. You might think, well, surely the court will end it when it feels fair. No. Courts don't end what isn't written to end. They interpret silence as permanence. And once that happens, your only way out is a modification request, which means filing motions, paying new legal fees, and reopening wounds you thought were healed. Thousands of people fall into this trap every year because they trust what's said at the table. Don't worry, I won't make this difficult. We'll revisit it later if things change. It's just until you're stable. But guess what? When the money starts coming in, stable never arrives. I've seen cases where one ex kept collecting alimony 15 years after divorce, simply because the original agreement didn't include an end date. The payer assumed it would, naturally, stop when the kids grew up or when the recipient found work. It didn't. Because nothing in writing said it would. That's how this quiet killer works, not with deception, but with omission. It hides inside your agreement as blank space, and that blank space becomes your biggest expense. Some states allow termination after a reasonable period, yes, but you'll have to prove in court that reasonable has arrived. And every hour your lawyer spends arguing that word is another hour billed against your future. A good attorney, a protective one, will always tie alimony to a specific end point. A date. A milestone. A condition. For example, payments shall continue for 60 months or until remarriage, whichever occurs first. That's clarity. That's protection. But when there's no timeline, no remarriage clause, no cohabitation condition, you're trapped in limbo. Every month, another check. Every year, another reminder that your freedom came with a subscription fee. And make no mistake, trust is often what gets people caught here. You believe your ex when they say, I just need a little help for a while. You believe your lawyer when they say, we can always adjust it later. But the truth is, you can't adjust what you never defined. Because to adjust it later, you have to fight to prove that the agreement was too vague to enforce. And the system doesn't reward vagueness, it punishes it. This is why every alimony agreement needs what's called a termination clause. It should spell out, in writing, when the payments stop. 1. After a set number of years. 2. Upon remarriage or cohabitation. 3. Or upon reaching a financial milestone, like stable employment or a certain income level. Without that clarity, you're not just paying support, you're paying interest on your silence. And here's the hardest truth, most people skip the termination clause not because they forget, but because they're afraid. Afraid to seem cold. Afraid to make things worse. Afraid that asking for boundaries means they don't care. But boundaries aren't cruelty, they're protection. And in divorce, what you don't define now, you'll pay for later. So when you're sitting across that table, pen in hand, remember. Peace is not the same as permanence. Never, ever, leave an end date to chance. Because once the ink dries, silence becomes consent, and consent becomes a lifetime of payments you never planned for. And if you think an endless payment is bad, wait until you hear about the next trap, the one where your ex's hidden income makes you pay even more. This one hits long after you think you're done, and it hurts the most. Agreement 4. The hidden income disaster. This one is brutal, because it doesn't hit you all at once. It creeps in quietly, buried beneath numbers, tax forms, and, trust me, smiles. Picture this, you're sitting across from your ex during mediation. The lawyers are talking figures, numbers are being scribbled onto notepads, and you just want it done. You're exhausted. You want peace. So when your ex says, that's all I make, I've got nothing else coming in, you take it at face value. The agreement is drafted. You sign it. You breathe, thinking it's finally over. But then, months or even years later, something doesn't add up. They're suddenly driving a new car. Taking expensive vacations. Posting about new business opportunities, or a promotion they swore didn't exist back then. That's when it hits you, they were making more money all along, maybe through side jobs, commissions, cash payments, or business write-offs that conveniently vanished on paper. And because you trusted what they disclosed, you're now locked into an unfair deal that bleeds you dry month after month. The cruel part. Once that divorce decree is signed, the court considers it final. Reopening it means you need proof of intentional fraud, not just a hunch, not just a new discovery. Solid, provable evidence. And that's a nightmare to collect. You'd have to dig through old financial records, subpoenas, accountant reports, all while paying more legal fees to chase what should have been fair from the start. That's why this clause is called the hidden income disaster. Because it's not just about what's written, it's about what's missing. Smart attorneys know this trap. They'll tell you, never rely solely on stated income. They demand full financial disclosure, not just one pay stub or a tax return, but a multi-year paper trail, W-2s, 1099s, business ledgers, profit and loss statements, bank deposits. They go deep. And if your ex owns a company, even a small one, this step becomes non-negotiable. A forensic accountant is your lifeline. These experts know where money hides, in deferred bonuses, fake expenses, shell entities, and creative accounting. They find the truth buried under layers of numbers designed to confuse you. It might sound excessive. It might even feel paranoid. But when it comes to divorce, trust without verification is financial suicide. Because what you don't uncover before signing, becomes your burden afterward. And here's the kicker, even if you find out later that your ex was making double, or triple what they claimed, the system doesn't automatically fix it. Courts often view signed agreements as binding, even if they turn out to be unfair. Unless you can prove your ex knowingly lied, the judge might shrug and say, "You should have done your due diligence." That's a sentence that echoes in your mind for years. Because by the time you realize what's missing, your ex has already moved on, new job, new life, new income streams, while you're stuck in a deal built on half-truths. So when it comes to signing that final paper, pause. Don't rush to get it over with. Divorce isn't just emotional, it's contractual warfare. Demand transparency. Verify everything. And never assume honesty when money's on the line. Because even if you catch every hidden dollar, the next trap, the one most people never see coming, doesn't show up in numbers. It shows up in timing, and it can destroy everything you've already settled. Agreement 5. The lifestyle clause, time bomb. Now this one destroys people quietly. It looks harmless at first. In fact, it even sounds fair. After all, both of you built a certain life together, the vacations, the home, the private schools, the comfort. So when the divorce papers mention maintaining the same standard of living after separation, it feels reasonable. Humane, even. But that single phrase, standard of living, can turn into a financial noose that tightens with every passing year. Because life changes. Inflation rises. Economies shift. Businesses fail. Careers stall. But a lifestyle clause doesn't care about any of that. It locks you into a snapshot of the past, a lifestyle that may no longer be sustainable, yet the court can still hold you accountable for it. Here's how it happens. Imagine you were the higher earner, maybe a successful entrepreneur or a professional. During the marriage, you both lived well, luxury vacations, new cars, designer wardrobes, dinners at places where the bill looked like a rent payment. After the divorce, you assume your financial obligations will be fair, scaled to your income and needs. But then comes that lifestyle clause. It states, spousal support shall ensure that the receiving party maintains a comparable standard of living to that enjoyed during the marriage. That sounds noble. But in practice, it means you've just promised to fund your ex's past lifestyle indefinitely, regardless of your changing circumstances. Fast forward 5 years, maybe your business slows down, your expenses rise, or your health dips. You think you can renegotiate, but the court looks back at that clause and says, you agreed to maintain this standard. Suddenly, your ex's new vacation home, cosmetic procedures, or country club fees are being justified as part of their marital lifestyle. You're no longer living that way, but you're still paying for it. This is why experienced divorce attorneys call it the lifestyle clause time bomb. It doesn't explode right away. It waits, ticking quietly in your agreement, until real life changes. Then it detonates, and you're left holding the financial shrapnel. The biggest mistake. People sign it out of guilt. They think, I want to be fair. I don't want to leave them struggling. But fairness isn't about maintaining the past, it's about allowing both parties to rebuild. The smarter move, the one seasoned lawyers push for, is precision. Instead of vague promises like maintaining the same lifestyle, they structure specific, time-limited payments that can adjust or end after clear milestones. 1. When your ex gets a new job. 2. When they remarry or cohabit. 3. When your children reach adulthood. 4. Or simply after a set number of years, 5, maybe 10. That's how you protect your future while still being reasonable in the present. Because the truth is, a lifestyle isn't a static thing. It's fluid. It evolves with income, opportunity, and age. The life you live together is not the one you'll live apart, and pretending otherwise only guarantees resentment and ruin. And here's the chilling part, judges often side with the written word. If your agreement says, maintain the marital lifestyle, they'll enforce it. Even if your income drops, even if your circumstances change. You'll have to prove a significant and unforeseen change just to get a modification, and even then, it's uphill. That's why the best attorneys don't just draft legal terms, they build exit ramps into every clause. They write flexibility into the contract itself, anticipating the reality that life moves on. So when you hear the phrase, lifestyle clause, remember this, it's not about comfort, it's about control. It ties your financial future to a memory, not a reality. And if you're not careful, that promise to keep things the same could cost you everything when the world, and your life, inevitably changes. Because the next trap is even worse. It's the one that doesn't just drain your wallet, it puts your entire privacy, reputation, and peace of mind on the line. The final word you need to hear. Alimony isn't just a line on a contract. It's not just a number, a payment, or a monthly reminder of the past. It's something far deeper, it's freedom disguised as debt. Because if you sign the wrong agreement, you're not just paying money, you're paying for peace that never comes. Every clause, every small detail, every promise of fairness can become a lifetime of obligation. A chain that keeps you tied to a version of yourself that doesn't exist anymore. You think you're signing closure. You think you're buying peace. But if you don't read carefully, if you don't understand what those words truly mean, you could be signing decades of regret. Here's the truth no one tells you, alimony isn't about punishment or generosity, it's about control. It's about who keeps the power when the love is gone. And once the papers are signed, that control shifts, permanently. That's why the smartest thing you can do isn't just to sign and move on. It's to slow down. To question everything. To make sure that every clause, every time frame, every dollar amount serves your future, not your guilt. Because divorce isn't the end of your story. It's the start of your rebuild. It's the blank page where you decide who you become next, stronger, wiser, and finally free. But that new chapter can't begin if you're still writing checks for the last one. So before you sign anything, stop and ask yourself. Am I agreeing to peace, or to permanent regret? Because the signatures fade, but the consequences don't. Freedom isn't found in forgiveness, it's found in foresight. And your future deserves better than a lifetime of payments for a past that's already over. Make sure your next chapter starts clean, not chained. Divorce isn't your ending, it's your reset. Subscribe for real talk, real strategy, and the truth they never taught you in court. And if you want to know the toxic divorce secrets, watch this video next. Disclaimer. This video is for informational purposes only and does not constitute legal advice. Always consult a licensed family law attorney in your state before signing any legal document. Every case is unique, and the right legal guidance could be the difference between freedom and financial ruin.